Welcome to the Explainer. Today, we're diving into a document that gives even the pros a headache, the Tax Audit Report, Form 3CD. We're going to focus on the very beginning of the report, and you'll see how the tiniest details can make a huge difference for the entire audit.
So, let me ask you this. Do first impressions really matter on a tax audit report? I mean, you might look at those first few fields and think, it's just basic info. But what if I told you that's the very first test from the tax officer? Getting it wrong can set a skeptical tone for everything that comes after. Think of Part A of Form 3CD as the official handshake. It is the absolute first thing an assessing officer lays eyes on. So it's not just a bunch of administrative data, it's a direct reflection of your diligence. Getting this part perfect, and I mean perfect, signals professionalism right out of the gate. And hey, don't just take my word for it. The Institute of Chartered Accountants of India says it loud and clear in its official guidance note. The key phrase here is diligently discharge the professional duties. See, this isn't just about filling in some boxes. It's about upholding a professional standard that the entire tax system is built on.
All right, let's start our little tour with clauses 1 through 5. Think of this section as your business's official identity check. There is absolutely zero room for error here. Painstaking precision isn't just a nice-to-have, it is the bare minimum. So, clauses 1 to 3 cover the name, address, and PAN. Sounds simple, right? But a small typo, maybe an old address, that's an immediate red flag. It just screams carelessness. The key thing here is to make sure this data is an exact match to the official PAN records. No exceptions.
Now, let's move on to Clause 4. This is where things get a bit more interesting, and frankly, it's where mistakes often creep in. This clause demands that you declare your liability for all indirect taxes, and I mean all of them, not just the obvious ones. We're talking GST, customs, excise, you name it.
Now, look at how this needs to be structured. The ICAI guidance note is super specific about this format. For every single indirect tax, you have to list the law it falls under and, this is the crucial part, the specific registration number. So for GST, you need that GSTIN. For customs, you need the IEC. This isn't a quick summary. It has to be a detailed, totally comprehensive disclosure.
And this brings us to a huge pitfall for so many professionals. It is just so easy to drop in the main GSTIN and move on. But what about that importer-exporter code for customs or maybe other state-level registrations? The guidance note is crystal clear on this. If a business has multiple registrations, even if it's under the same tax law, you have to report all of them. Anything less is just incomplete reporting, and that suggests an incomplete audit.
Okay, next up is Clause 5, status. This sounds simple, but it's actually a very technical term. You're not just, describing the business, you are classifying it based on the exact legal definitions in the Income Tax Act. Choosing firm versus company versus AOP has major downstream consequences for the whole report, so you've got to be legally precise.
All right, moving on to our next checkpoint, clauses 6 and 7. This is where we define the timeline of the audit by stating the previous year and the assessment year. Again, it seems pretty straightforward on the surface, but there are some common exceptions that can easily trip you up.
For most businesses, sure, the previous year is just a standard 12-month block. But what about a brand new business that kicked off mid-year, or a company that just went through a merger? In those special cases, the previous year will not be a full 12 months. Reporting a full year when it was actually shorter is a pretty fundamental error, and it can call all the financial data that follows into question.
Now we get to Clause 8, which answers a really critical question for the tax authorities. So, why are you even doing this audit in the first place? This clause is where you state the specific legal trigger that made the whole thing mandatory.
Getting this wrong is not a small slip-up. It really shows a fundamental misunderstanding of why you're even preparing the report. It's kind of like a doctor writing you a prescription, but forgetting to note down the diagnosis. You have to nail down exactly which subclause of Section 44AB applies to your client.
So what are these triggers? Well, as you can see, Section 44AB gives us a few different reasons. Was the audit triggered because the business turnover crossed that threshold? Or maybe it was because the gross professional receipts were too high. A really common one is for businesses on a presumptive tax scheme that are declaring profits lower than the presumed rate.
Each one of these is a different subclause, and you've got to pick the exact one that fits.
Okay, so let's pull all this together. What's the big takeaway from all this? It's that in a tax audit, the foundation is absolutely everything. And these opening clauses, they are that foundation.
When those initial details, the name, the PAM, the tax numbers, the dates, the reason for the audit, when they are all flawless, it sends a really powerful message. It tells the assessing officer that they're looking at the work of a diligent professional and a compliant taxpayer. And that can set a positive, cooperative tone for the entire process.
On the flip side, being imprecise isn't just a simple mistake. It's a seed of doubt. It just invites extra scrutiny. It raises unnecessary questions that can drag out the whole audit process. Every little error, no matter how small it seems, is basically an invitation for a deeper, more painful look.
So I'll just leave you with this thought. Every single tax audit report tells a story. The real question is, right from the very first page, from that very first clause, is your report telling the right story? A story of precision, diligence, and professionalism? Thanks for watching The Explainer.